Welcome to the February recap. In this recap, we're going to do a couple things. First, we're going to look at the overall account balance year to date, as we always do in the weekly recaps. And we will then look at monthly income. So, all the income from the dividends, money market interest, and option selling, and what is the kind of month by month sum of all that activity. So, without further ado, then we're going to go line by line through the account. So, SPACs down year to date, again, as expected, as we are using SPACs to buy the new to the account ETFs at the bottom, DIVB and CGDV. And again, one thing that to note if you're new is that although we've put in about 1,600 into the new ETFs, SPACs is only down about 800. And the reason is we've been making money through selling options, which we'll see in part two of this video. Okay? SCHD is clearly the kind of the belle of the ball so far year to date. Had a bit of a slow start, but has really come on lately. And as you can kind of see on the right, clear leader in year to date growth, far outpacing the others. So I think at one point SCHD was kind of at the bottom in terms of growth for the account, and now it's clearly leading. Okay. JEPQ, which was the belle of the ball as late as 10 days ago, has really taken a turn with the overall market downturn. So what was about between 4 and 5%, I think over 5% year-to-date growth is now down to under 1% growth, and that includes the two dividend payouts. There should be another dividend coming out within the next week or so. But clearly it's been struggling as of late. Still positive, but not as high as it used to be. Okay, and again, if you didn't watch the intro video for this year, SCHD and JEPQ, we are not putting any money into those ETFs. So any growth is purely from price increase and or dividends. So for both of these accounts, for all ETFs, dividends are on drip. So any dividend payout will be reinvested into the same ETF. FNILX, again, was pretty strong, has come down as that tends to kind of mimic the S&P 500. Apple and Microsoft, again, kind of continuing to be the dogs of the account, and not dogs in a good way. So both negative year to date. Microsoft, there will be a small dividend in March. Again, only 3 shares, so not expecting a big payout, but any payout is a good payout. And then moving on to the new to the account ETF. So about $22 growth in DIVB and about $14 growth in CGDV. So if you are new to this channel or this dividend series, every week, every Monday, we put $100 into each of these ETFs. So far it's been 8 weeks, so a little bit just under $800 into both. And I say a little bit under 800 because the actual buys, although it's set to be 100, it rarely ever is exactly 100. Maybe 99.98, 99.96. So it'll get close to 100, but it's rarely ever exactly 100. So year to date so far, definitely DIVB is in the lead over CGDV, but still plenty of time left. But so far, that is the winner. And then, again, as I mentioned at the top, we do sell options from time to time. So right now, there's an active NVIDIA cash secure put that was sold for about $275. It's now at 131, which is good. We want to see the value decrease as an option seller. But as again, if you've been following along, NVIDIA puts, NVIDIA options overall tend to move very violently day to day. So what could be $100 value this week can be 300 the next week. They could go down to 150 the week after that. It could go up to 400 the week after that. So very volatile. So it tends to mean great premiums, but you can also get blown out as well if you're not careful, and definitely get some seller's remorse. So all that leads to an overall account balance of 45,887 and 85 cents. Year to date, that represents a gain of 1,097 and 22 cents and growth of 2.45%. Okay, so I mean overall beating the SPY year to date, so not bad, beating the overall market for a dividend account. So it kind of shows kind of again the power of the kind of power of both dividend investing as well as strategic, careful option selling to generate additional income. So that kind of wraps up the year to date kind of overall account balance. And now we are going to switch to income. All right, so looking at income, February, definitely lower than January, but for an account of this size, still very, I think good income. Look at kind of block by block. Less options income in February. I think like it's a key part of that was in January we sold two options, and in February we sold one option. So if we kind of try to sell another, there was a potential to sell another one at the very end of February, but have opted not to. Uh, but still very solid. And overall, you can see that that's clearly the lion's share of total income uh, year to date and each individual month. Okay. Then in the kind of the red, we have the SPACs income. So kind of have the table up here if you're more of a table person, and have the chart down here if you're more of a visual person. So with SPACs, then down month over month, and again that's to be expected as we draw down the SPACs, which is Fidelity's money market account. As we draw down SPACs to buy the new ETFs, I expect this to kind of go down generally over the course of the year. But also there may also be interest rate fluctuation as well. So if the interest rate declines, of course, the amount of interest will decline as well. Then another component is February is the shortest month, so all else being equal, February will have a smaller payout than other months. JEPQ in the kind of like the yellow, again, pretty consistent month to month. Uh, I think we're getting close to where uh, it can eventually be able to the dividend could be able to purchase full shares. So maybe by the end of the year that may happen, but right now it's very close. Or if JEPQ does continue to decline in price, that can also happen that way as well. And then in February there was a small Apple dividend. Again, Apple doesn't pay a huge dividend, and we only have about six a few shares, so $1.64 there, so small. But like I always say, a dividend is better than no dividend, so it does add to the kind of overall account balance. It is reinvested, so our total Apple shares do increase ever so slightly. Okay, so total income January 546, total income February 387. So year to date, total income about $933. So again, that money was just entirely sitting in a money market account. The total interest would be far total income, excuse me, would be far less than that. So almost $1,000 income through 2 months. Definitely not too shabby. Um, and for March, I would expect it to maybe be a little bit probably somewhere between January and February. So right now, with all the volatility in the market, there's still a lot of great opportunities to sell options. Just kind of depends on what the risk appetite is. So with when selling options, you can definitely force the issue. So in other words, I can very easily make $1,000 selling options in March. It's how much risk do I want to take on to make that $1,000? Again, when you're selling an option, you get paid up front. You get paid immediately, and so you can basically pick a strike that offers you the money you want. Uh, However, again, that can be extremely risky if you're only looking at premium and not actually looking at the full metrics. Right? So that wraps up month number two down, 10 to go. I hope everyone has a great March, and stick to your plan. Don't let the news kind of bring you in like a herky jerky mode. No panic selling, no panic buying. Just stick to your plan. Be strategic, and remember that over time the market does go up. So that being said, I bid you all adieu.